More and more Australians are trading backyards for balconies. They're happy to live in apartments, trading space, big front and backyards for place, being in the right location. They want to be where the action is. They want to be close to amenities, close to the shops. In fact, apartments have changed the shape of our cities, and not just the CBDs or near CBDs. Now you go out to the outer suburbs, middle suburbs, and you're going to see apartment buildings along the main roads above the shops. In fact, some people say Melbourne and Sydney have Manhattanised. Look, if you came back to Australia after a decade, if you're an overseas visitor, you wouldn't recognise the shape of particularly our big capital cities. So have we been building too many apartments? Because for a while people have said there's an oversupply that's going to create a crash. Or are we building the wrong type of dwelling? And what's ahead for our property markets? That's what I'm going to discuss today in our weekly Property Insider chat with Dr. Andrew Wilson, Australia's leading housing economist. Welcome, Andrew.
Thank you, Michael.
Well, for a long time, people have been predicting a crash related to the unprecedented apartment boom of the last 5 years. I believe over the last little while, lower interest rates have driven developers to building these new dwellings, these new blocks. Migration has led to this. In fact, it's been in some ways fueled by the government, who is trying to move construction workers from the mining sites to our big building sites in town. But what's the position of the apartment market in Australia at the moment?
There's no doubt, Michael, that particularly in Melbourne and Sydney, we're at peak supply. It's a tough market if you're a developer trying to sell units in both those markets. Of course, it's sort of dovetailed with a hit to sentiment that we've had and other questionable policies designed to restrict investor activity, which has come just at the wrong time for peak supply now in the marketplace. It is a counterproductive, I guess, mindset to be railing against perceived overbuilding of apartments in our capital city markets. We've come through, as you said, Michael, a remarkable period of development for apartments in all capital city markets. Have had very strong high-rise development, the exception being Hobart. Of course, that was fueled by the lower interest rate environment, which typically activated investors, high levels of migration, demanding, of course, supply. You know, our overseas migrants come, a lot of them, particularly from Asian markets or from Asian countries that favour higher rise living, apartment living. You know, this did fuel very strong and in times, I guess, speculative development. And of course, once that occurred, we had the usual doomsayers who, as usual, get it wrong, but they move on to the next theme of predicting, you know, cataclysmic outcomes from a perceived oversupply of apartment. But I think the interesting thing, Michael, is that the back end now of supply in the apartment market has dissipated. We have very low levels of new apartments coming through, approvals coming through. Did see a little bit of an uptick recently in the ABS data, but numbers remain quite significantly below where they were a year ago. I guess we're going to now move from this perceived oversupply to an undersupply, maybe sooner rather than later.
One of the factors creating the mismatch always seems to be the long lag times in getting development out of the ground. So developers have to amalgamate a site, they've got to get development approval, then they've got to pre-sell it, then they've got to get finance, and then there's long construction time. And what seemed like a really good idea 3 or 4 years ago, sometimes the market moves on and the cycle.
That's right.
We've realised. And at the same time, other developers have had the same great idea, but it was over the last couple of years fed by a fear of missing out, and not only local investors, but also overseas investors and superannuation funds buying. But in the last couple of years, the government's pulled the welcome mat out from the overseas investors. They've given them extra taxes, extra duties, and they've made it a disincentive. At the same time as where China in particular was making it difficult to get capital out of the country. So that's one group of buyers who've moved out of the market. The local investors are having trouble getting finance, and particularly those who are looking for buying in their self-managed super funds. And some had the right idea. Others, unfortunately, were being misled by people with vested interest and should never have been doing that anyway. But the banks have got very scared with that as well. So we've actually lost a huge number of the potential buyers that were there a couple of years ago.
Yes. Well, that's right, Michael. And as you suggested, the whole issue in terms of the mismatch between supply and demand in the apartment market is that the very long production times that are involved. At the end of the day, as long as population continues to grow, as it will, and migration continues to be strong, as it will be, reduced supply will only soak up those excess apartments that are in the market now, which we've actually seen quite substantially as an example in the Brisbane market.
Well, interestingly, much the same happened in Melbourne with all the high-rise towers happening around here. People said there was going to be an oversupply, but the population growth soaked that up very nicely, Andrew.
Well, that's right, Michael, and we're still seeing quite tight vacancy rates in Melbourne. And one of the reasons why, even though those vacancy rates have eased somewhat, has been a surge in first home buyer numbers in Victoria. Similarly, in New South Wales, which has taken a lot of demand out of rental markets. We've seen vacancy rates rising in Sydney. And having said that, when we look at other leading indicators of demand, such as prices and clearance rates, units are continuing to outperform houses, Michael.
In part, that's because as the investor market has quietened, first home buyers are taking up the opportunity to get into apartments. So it is interesting. Our preferences have changed. So Australians, as I started at the beginning, are very comfortable trading backyards for balconies, especially to start off. In the old days, people, I think, wanted to start a bit like their parents did and hoped to have a house in the front and backyard and a media room and all the appliances. We're becoming more realistic. I think our lifestyle's changing also because we don't entertain as much at home. We entertain outdoors. And as you said, the international population that's coming to live in Australia are expecting apartment living. That's all they're used to. My concern is the quality of build of some of the apartments, and the Opal Tower was a really good example of that, but there are others that have had trouble. I jokingly say some of these new buildings are being built out of paper mache. Others don't have good natural light. The apartments are too small. So we are building a lot of investor stock built for investors, aimed at overseas investors rather than investment grade. And that's the problem compared to the old fashioned, what were called flats when you and I grew up, which were built solidly, 2-3 story walk up, a higher land to asset ratio. What's missing in my mind is the middle area. We're building all the new apartments in town. We're building the house and land packages out in the outer suburbs, but the downsizers, the baby boomers, the young families, they're wanting more townhouses in the inner and probably maybe more middle ring suburbs, Andrew.
Well, look, you're right, Michael. It sort of gets back to that, what we were discussing about the mismatch between supply and demand. And we're seeing developments still coming into the marketplace that are designed, as you said, for investors. There has been a concern about the size of a lot of these apartments that have come, particularly in Melbourne, that are quite small. But again, the big picture is that the demand for housing, types of housing, is shifting. We're seeing now, and we will continue to see, apartment living being embraced by a different cohort. It won't be those, I guess, executive couples or first home buyers or single. So we're now seeing a lifestyle choice driving apartment living. As you suggested, Michael, moving away from the typical detached home on the fringe. The fringe now, I guess, is spread that far that it becomes a real issue in terms of quality infrastructure. There's now a growing demand force from empty nesters and downsizers in their, I guess, older age groups that rather than perhaps heading for the retirement village or heading north for the sun, are now looking for another step on the property ladder. And that, of course, is perhaps an inner city apartment. We're also seeing families looking at the apartment market as well.
Well, I found most baby boomers aren't going to see change or tree change like was predicted years ago. They do want to downsize. And I remember in the old days, the idea was you'd sell your home and you'd actually get money and you'd be able to move into something smaller and have money left over. Doesn't work that way anymore. It costs as much to get a good townhouse or a good size apartment in the suburb. But they want to stay in the same suburb. They want to go to the same dentist, hairdresser, be near their kids. And it's really a town planning issue at the moment in the middle ring suburbs. In fact, they're the areas where there's minimal change in development. And as you said, they're the NIMBYs, not in my backyard, and others call them notes, not over there either. I don't want them in my area. And this is where there is a tension because more and more baby boomers are going to downsize. and have got nowhere to go. So I guess some are staying in their homes at the moment and renovating them and doing them up instead.
But the point is, a lot of these empty nesters, downsizers, want to remain in the areas they are. But quite paradoxically, they've been the very energy that's restricted higher density in those areas. And now when they're looking for a townhouse or a villa unit, they can't find any that are reasonably affordable in terms of what they have, the sale price of the family home. This is all part of the drive towards apartment living, Michael, which is of course the offset to urban sprawl in Melbourne and Sydney. But look, this is a transition from, I guess, our mindset for what is the desired residence, the desired dwelling. And we shouldn't be surprised that this is all part of the maturing of the urban landscape that we do see in European and larger American cities as well.
Well, if you were to live in New York, Paris, London, any of the big other world cities, you wouldn't expect to live in a home. You wouldn't expect to have a front and backyard. You'd be very comfortable living in an apartment. And so the nature of how we live in Australia is changing. And people don't really want to drive 2 hours to get home. They want to be able to get home quickly. And our public transport is suffering a bit at the moment too, as having difficulty coping with this. So I think all this is going to lead for more of a demand living closer to our CBDs.
The other thing we seem to forget about the apartment boom, other than the scary stuff about oversupply, is the significant contribution that the apartment booms in all capital city markets, as I said, with the exception of Hobart, had to the local economies. I mean, this is a real concern for me with the collapse in apartments development coming through now. It's going to have a real impact on local economies. There's no doubt that the boom in the Brisbane apartment market helped to offset the end of the mining boom. A lot of jobs were created. Apartment development has a very strong downstream economic energy to it. Those on-site jobs flow through to many associated industries. That's what kept the Brisbane market ticking over in a period where the mining boom ended. And we've similarly seen the same thing in Melbourne, which has had record apartment construction. Now, that had a significant consequence for an economy that was really struggling with the virtual death of big manufacturing in Melbourne. We saw the end of certainly the car industry in Melbourne. We saw high unemployment in Melbourne coming through in 14 and 15, and that, of course, was a factor in the Melbourne market being quite subdued when Sydney was taking off during the beginning of the low interest rate environment. A lot of those factory jobs, manufacturing jobs, transferred across to construction. That genuinely helped to revive the Melbourne economy. And now what I worry about is, what's going to happen going forward now when we don't have that same strong level of apartment development fueling jobs. And there's no doubt that apartment development is a very rich source of labour. And as I said, works its way through the food chain of the economy, and we're not going to see anywhere near that level of economic energy in all our capital city markets that we've had previously. So where are the jobs going to come from? That's a key question, Michael.
What about infrastructure, Andrew? Our governments at the state level and federal level are now looking to spend on infrastructure. To me, that's going to create jobs. It's going to use local resources. And I like the fact that it's going to leave a legacy for the future.
Yeah, infrastructure is fine, Michael, but it doesn't create anywhere near the labour output that apartment development does. It's a different kettle of fish, infrastructure, in terms of job creation. It tends to be much more capital intensive rather than labour intensive, and it's certainly the reverse in terms of apartment development.
One of the things I like about the apartment developments that have occurred along the shopping strips in our middle ring suburbs is that it has revitalised those suburbs. They've pulled out the old shops, they've built shops below, gyms, service areas, and then people living above. So that's actually been great for the local shopping strips to revive them with the competition of big complexes and online shopping. And so while we don't like buying in those new developments right on the main streets, we love buying apartments, houses, townhouses, villa units a couple of 100 metres away, because you got all the benefit of the vibrancy of the local centres.
Oh, that's right, Michael. And of course, if you're getting more people per square metre, in a suburban neighbourhood, that's more demand for services, for goods and services.
We're very lucky. We're living in the best country in the world, probably
Absolutely.
in the best time in history. So we're doing really well. I think it'd be really interesting when we sit together and have this chat, a Property Insider chat again in 10 years' time, to look back and see how the shape of our cities will be very, very different then. We probably won't recognise them again. There'll be lots more apartments. We'll be living differently. And I guess we're going to be living longer, and most of us are going to want to be staying at home longer rather than going into retirement villages. So some interesting times ahead. Thank you very much once again. Look forward to our next chat next week, Andrew.
Thank you, Michael.